Hi everyone, today I am with Rhonda Crocco from RMA Mortgages. Hi Rhonda, thanks for joining me today.
Hi everyone.
So I'm going to be asking Rhonda a couple of questions, just kind of give you an overview of the benefits of using a mortgage broker versus the typical bank. So first question, Rhonda, is it easier to get a mortgage from a broker versus a bank?
Actually, I would say it is easier for the simple reason that every bank has a certain size box. If you don't fit inside that box, they can't give you a mortgage. Whereas as a broker, I have 72 plus different size boxes, so the odds are better that you're going to fit in one of them.
Oh, that's perfect. So you really cater to a diverse group of buyers, or
absolutely, and regardless of what the purpose for the loan is, whether it's to purchase or refinance in order to purchase something else.
Sure.
There's many different products available in the broker channel that an individual might have to shop from bank to bank to bank to bank to bank to get. So it's easier and more.
You do the shopping for them.
I do all the shopping. Right.
Okay, perfect.
Yeah.
So question 2 is, why should I talk to a mortgage broker instead of my bank? And I think that maybe you just kind of answered that.
I think I did.
Right?
I think I did.
What type of loan would work best for a first-time home buyer?
Okay, I'm glad you asked that question because there are many different types of mortgages. So as a mortgage broker, I would first get to know my client a little bit and get to know what your needs are. In this case, I would learn very quickly that you're a first-time home buyer.
Yep.
And usually a first-time home buyer has a down payment of less than 20%.
Most times.
Most times, that's right. So the mortgage will be insured. It will have default insurance with CMHC.
Okay.
And in most cases, depending on what the market is looking like, we tend to want to have a fixed rate mortgage as opposed to a variable rate mortgage for a first-time home buyer, for the simple reason that the first-time home buyer, in most cases, has never even paid rent before.
Very true.
So we want to make sure that they're comfortable with that payment and that they know that that payment isn't going to change for the whole term of the loan.
It's a peace of mind for them.
Exactly, and it helps them budget.
Right.
So initially they might decide to take a fixed rate with a monthly payment. And then as they get used to all of that and paying taxes and utilities and everything that goes along with homeownership, they might then opt to change it to a biweekly payment in order to decrease the amount of interest they're paying on the loan. But the fixed rate mortgage is generally the better option for a first-time home buyer.
Great. Very interesting. So question 3 is, how are you paid? Like, does the person borrowing the money pay you, or how do you get paid, Rhonda?
No. So what happens is that the institutions will pay me what's called the finder's fee. And the only time a borrower would pay a broker is, let's say I had to borrow private money. So I was going to borrow Mr. Smith's money and lend it to...
And when would somebody borrow private money? Why would they do that?
It could be because they're in need of short-term funds. It could be because they need a bridge. It could be because there's a credit blemish or income is not from traditional sources.
Got it.
So there's many reasons to use private money, and they're not all bad reasons.
No, sometimes at least you're getting into the market and getting through that little hiccup until you can get a conventional mortgage, I guess, down the road, right?
That's exactly it.
Is that it?
Yeah.
Okay.
Yeah.
Perfect. Question 5 is, Rhonda, what advice is it that you could give to buyers that haven't entered the market yet?
That's a great question, Kim. And I tell people this every day. Save as much money as you can. Keep your credit perfect. Do not buy anything on don't pay a cent event, deferred payment, pay later.
Important.
Don't spend $80,000 on a car. You need to get from point A to point B.
Great advice.
But you don't want to be paying $700 a month to get there, plus insurance and gas and everything
100%.
else.
Because you're not raising your family in that car.
Correct.
At least that's not the objective.
Save as much money as you can. Do a budget. Make sure that savings is part of that budget, and make sure that you do not carry credit card interest.
So is that something that you would essentially help, clients with a, 1-year projection of getting them set up? Do you help them sometimes with a budget?
That. Yes, absolutely. Okay. I do that. Yes.
Question 6, what is considered to be a good credit score?
Okay, so there's many different factors. So a good credit score is from 680 to 720. A good credit score is in excess of 720. How do you keep that score? Don't max out your credit cards.
Right.
Try never to owe more than 50% of a credit card limit. In fact,
good tip.
In fact, if you can't pay it off at the end of the month, don't buy it on the credit card. Period.
Right.
Once you reach 80% of a card's limit, your score is going to start to decline.
Good
and
advice.
If you meet the limit, your score will plummet.
All right. You hear that, everybody? This is really great advice. So, like I always say, sometimes, it's important to kind of live below your means. Our society is so caught up in living above our means and having it all.
Everything now.
Yes. And it's.
Yes. Yeah. And another thing, if I may,
of course,
you're entitled to a free report every year through Equifax and TransUnion. I absolutely recommend that you contact Equifax and you contact TransUnion and you get a copy of your credit report. That is the only way you're going to know that nobody else is using your credit, that credit that you might have canceled has actually been canceled, is no longer reporting, and that items that you've paid as agreed are reporting that way. So you should get what you're entitled to.
So it's Equifax, as you can see here, and TransUnion. There's the other one there. Okay, so that's who you can contact once a year for a free credit report. Great advice as well. So you're just filled with great advice today, Rhonda. All right, question number 7. Rhonda, what is the difference? Can you please explain the difference between a rate hold and a mortgage pre-approval?
Excellent question. I personally don't like the words pre-approval. I don't like them. Because what's happened is 9 times out of 10 you have visited your bank, and I'm not dissing the bank.
Sure.
But you visited your bank and you said, yes, this is how much I make and this is how much money I have to put down. And they said, oh, well, based on what you told me,
right,
you could qualify for a house of this amount of money. Okay?
Right.
So then you go shopping and you're pre-approved, so you don't put a financing condition on your loan. Well, guess what? Your income isn't quite the way you described it.
Right.
And the bank doesn't like the house you bought.
Right.
So I prefer to use the words rate hold because we can hold the interest rate for you for up to 120 days. What does that mean? It means that you're guaranteed that the rate we give you on paper will not be any higher during that rate hold period. If the rate decreases during that period, though,
right,
as a broker, we'll renew the rate. So we'll rebook the rate for you so that you get the lower rate.
And I think, here's something else that I've discovered quite often with buyers that where they don't have an understanding is that 4-month rate hold that Rhonda's speaking of. You must be moved in by the end of that 4-month period and hold title. So you don't get that rate hold for 4 months. You need to be moved in.
The mortgage has to fund.
Thank you.
By the end of that rate hold date.
Yes, absolutely. Great. Once again, very interesting information as opposed to the pre-approval versus.
It's just, I find that the pre-approval gets it in someone's head that they can actually spend that much money and that's it. But there's other things that are always involved, like property taxes. Higher property taxes could decrease the amount of money on
the
that
lending power
on that pre-approval.
Right, right.
So
it's deceiving a little bit.
It is, and it's always good practice, especially so you're working with Kim, your real estate agent, and she shows you a home that's just a little bit outside of what we talked about. Call me. I'll look at the taxes. I'll look at all different factors. We'll review your income. Maybe there's a credit card we can pay out. And then we know that you can buy it.
To make it happen.
Yeah,
absolutely. The interview is just about wrapped up here with Rhonda Caraco from RMA Mortgages. Thank you so much for your time today, Rhonda.
You're welcome.
But before we go, first and foremost, we are going to answer 5 fun facts in 5 seconds or less. Okay? You ready?
Yep.
What was the last gift you gave someone?
Vacuum cleaner.
A vacuum cleaner. Okay. What is the bucket list? What is on your bucket list that you still want to do?
Go to Italy.
If you could go on vacation anywhere in the world, where would it be?
Italy.
Dog or cat?
Dog.
If you could invite anyone to your home as a dinner guest, who would it be?
My dad.
And have you enjoyed our time together?
I have.
There you go. We're going to say goodbye. And Rhonda Crocco for all your mortgage needs from RMA Mortgages. Her contact info can be found below. Have a wonderful day.